Good morning, everybody. Hey, welcome to Friday, the end of the week, and we've had a really good rally here towards the end of the week. I'm sure Dave will have a lot of comments when we start looking at that. But hope you have a great weekend as we get ready to start the show. Dave will be with us in just a moment.
I'm in reality. It's 41 now, 19 here before 9. Find out what's going on Wall Street. This is one of those days in which I looked at the futures markets and said, what in the Sam Hill is going on? Now, normally when I do that, it means it's bad news. This day, it's actually good news this morning. Let's go downtown to the offices of Statler Financial Services, where Phillip Statler is standing by. Phillip, futures are going crazy. What's going on this morning?
It seems to be, China seems to be the whole deal. Whenever China starts to seem like maybe we're coming to some kind of an agreement, the markets really like that because that's a big deal when it comes to our economics. And so, now there's optimism on the U.S.-China trade talks. Supposedly President Trump is going to meet with the top Chinese trade negotiators. All these things are very optimistic when it comes to our relationship with China. So that is pushing the market up today extremely well.
It sure as heck is. It's an amazing uptick. Just to be a spoiler in the process, 240 plus points has my delayed quote in here. I hadn't seen the news item that President Trump was actually going to be talking to the negotiations. And that explains maybe the sudden sense of euphoria, because generally it's been a couple of levels down from the presidency that have gotten involved. That does indicate that things are getting a little closer, right?
Well, it does, and I tell you, we have had a couple great days here on the stock market returns, and so I'm looking at the weekly returns, and we are all positive. And actually, when you look at the 12-month returns, we're actually positive for a change, also.
Given the fact that we went negative only about a week ago, for 12-month returns, it's kind of nice to see us back in green ink for a 12-month tracker, isn't it?
Well, it is. But one thing we do have to remember when we start talking about that 12-month return is that October is when the market started to slide significantly last year. And so over the fourth quarter of last year, we had a huge downtick in the market. And so that's going to help our annual one-year returns as we look at that number continue to move down the scale.
Point taken, that we're entering that period of time from last year, which is kind of destroyed why, folks in your line of work don't tend to quote the year-to-date all that terribly. Because our year-to-date looks great, but the problem was around January 1st, we were pretty much scraping bottom on a correction.
Exactly. And so, yeah, I've had some folks say, well, yeah, but this stock's had a great year-to-date. Well, go back to October 1st and tell me how it's done, because that's what the real number needs to look like.
I was going to say, changing an old sock in my drawer has a good year-to-date number these days. It's not that hard, right?
Yeah, exactly. So, and they should all have good year-to-date numbers. If they don't, there's a real problem.
That's a valid point to be made. So we got trade rumors going on. The Federal Reserve has announced that they're going to continue to buy hundreds of billions of dollars in bonds in an effort to try to stimulate the economy and calm stress. That also adds some excitement, I'd assume.
Well, I'm sure it does, because that's just that quantitative easing back at work again. And so as they buy, that's putting more money into the money supply, and so or more cash into the money supply, and so more money for people to spend, which is good for the economy.
Absolutely. And with a little bit of luck, if they manage it well, as we keep saying, a recession is inevitable some point in here down the line. If they manage to keep the economy on a slow trend downward and then that soft landing, I've been saying for a while now that Paulson would deserve a Nobel Prize in economics if he can manage it. And so far, at the very least, it seems to be having a positive effect.
It does. And so we'll have to wait to see how that plays out and how they react as our economy continues to slow. And, at the end of the month, we'll have that first blush of the GDP number. And that's going to be, I think, a critical number.
I suspect you're right, because we overreact to just about everything right now. Witness rumor, in fact, on trade negotiations, an extremely negative or extremely positive surprise on the GDP at the end of the month could make November a rather interesting month in the markets, couldn't it?
It really could, because this is a critical quarter heading into the end of the year as we get earnings. I saw a little flash headline said, earnings may be better than expected or better than what investors are expecting. And so, I don't know who's trying to prop up what, but, we'll have to wait and see what the real numbers end up looking like.
Understood. We are starting earnings season with the first blush of what it could look like with the financials beginning, we suspect, a little later on today. Citibank's going to be the first one, and I'm kind of looking at a couple of things on my big winners and losers list, and I've got kind of a split vote as far as the financials that are trading up and down based upon their guidance and rumors that are floating around among their individual shareholders. Is there any conventional wisdom as to what we should be expecting? Have you seen any guidance to give us this indicators?
I have not seen any guidance. I did see a little headline the other day that indicated that as the trade talks continue to go well, that's helping the bank stocks. But that's not going to be reflective in their earnings report that's coming out. And so I've not seen anything that give me any indication. Other than, towards the end of last quarter, I saw some articles talking about how beat up banks had gotten over the quarter. So, and analysts a lot of times will start adjusting, right, their numbers. And so it's going to be hard to figure out exactly what that's going to look like until the numbers start to flow.
Understood. They're more buying on expectations than they are on expectations of quarterly results when I see a couple of 2% increases from minor players in the banking industry.
Yeah. So, hey, the other thing we've got, and I think this is a big deal for folks because people are always asking me, hey, how do I get in on the marijuana stocks or the cannabis stocks? That's what I really want to, I think that's the way of the future. And it probably is to a certain degree. But one of the analysts has come out and slashed cannabis stocks by 50%, basically saying they're going to drop over the next short period down by 50% going forward. And I find that kind of an interesting play.
Why do they think it's going to go down? I mean, I tend to be a little reticent on the growth potential being the skyrocket like tech was about 20 years ago, but why do they expect it to go down?
I didn't get a chance to really dive into the whole article. But if I was really looking at it, because I think one of the things that I've seen be a big thing in the last probably 6 months is regulatory issues and quality issues seem to be the two things that when I read articles about cannabis companies, those are the two things that keep raising their heads and getting companies into trouble.
I suppose with all the news stories about THC-based vaping incidents, that would be a negative on it. I don't know the percentages, don't know the industry, but like I said, an expectation of going down kind of surprises me. Data dump out of the federal government this morning. The only real information that we got out of the government this morning was import prices, and this was a bit of a surprise. All the journalists that were saying, all of these tariffs we're throwing on, it's going to get tacked right onto your import prices, and the world's going to end and whatnot. Once you factor fuel out, import prices fell by 0.1% last month. Boy, those tariffs are killing us, aren't they, Phillip?
Well, they are, but you got to remember, you factor out but if you factor that back in, right, we were up 0.2%, and we were expected to only be up a little less than 0.1%. So oil is always impactful for our economy, both directions, right? If it goes down, it's impactful. If it's going up, it's impactful. And so, take out oil. It's a surprise, but prices did go up overall. Compared to what was expected.
And that's understood. I was just reacting to the Chinese widgets that we were supposedly going to get really the shaft on. Overall, going down, which kind of surprised me. 45 minutes before we opened, set the table for yesterday. The Dow was up 151 yesterday. NASDAQ was up by 47. Standard & Poor's up by the better part of 19. Everybody more than 0.5% gains yesterday. Normally, that'd be a hold steady day or a pull back day, but it doesn't look like it so far. 45 minutes early. Where are we going, Phillip?
Hey, when we look at things are going to continue as they did yesterday. Everything's up almost 1% or better as we look at the futures. The Dow's up basically 1%. The S&P 500 is up just shy of 1%. And we got the NASDAQ up a little over 1%. So everything, it looks like it's taken off off to a great start. And as long as there's nothing drastic in the trade talks, I think that maybe it continues today. But you don't really know until all the rumors get sorted out, right?
Exactly.
So we got gold and silver both trading down by about 0.7%, and then crude oil is heading up. It's up 1.1% this morning to $54.16 a barrel.
Yeah, and then starting to get up to the point where we can start complaining about the price of oil again. Overseas markets, by and large, everybody's green ink. It was party time in Hong Kong overnight last night. Their market was up by 2 1/3%. Europe also trading green today as well, halfway through their day. Phillip, in terms of getting advice for how to capitalize on this short-term stuff but insure against the long-term downticks, how do I get a hold of you for advice?
Dave, give us a call at 382-0037. Schedule your second opinion on your current portfolio. You know, risk is important, and we're bumping up against highs again. And so you want to make sure you're ready and have a plan for the downside. And so that's really a big deal. Give us a call and let's go through that with you. And then check us out every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
All righty, and back here on Monday morning, same time on Light FM. Phillip, thank you so much. You have a dynamite weekend.
All right, buddy, you too. Talk to you soon.
Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Have you done?
Hey, folks, again, I want to thank you for joining us today. If you like what we're doing, please like our page at Statler Financial Services and share this video with your friends and family. Have a great weekend, and I look forward to speaking to you again on Monday.